Gold and silver have pulled back over the past week, but today they are doing very well at just 2% for the day. But with everything that's been going on, could this really just be the calm before the storm? New regulations are soon to be in place, and precious metals are going to be right at the center of it. So let me explain everything here. Let's break it all down. Hi, everybody, and welcome back to yet another video. So before I break down what's been going on this week, let me just remind you all that we are officially doing the live stream / giveaway next Tuesday at 6:30 p.m. Central Standard Time. I'll be giving away some silver, so make sure to subscribe and be a part of that stream so you can participate and even possibly win. If you remember, you have to be a subscriber to enter, so keep that in mind. But with that being out of the way, let's get back to the video. Alright, so here's just a quick recap about everything that's been going on with gold and silver this past week. And for the most part, we saw a slight pullback in gold and silver still remaining flat. And today, they've done very well, with gold being up around 2% and silver just slightly above that. And a lot of this has been because of the 90-day tariff pause between the US and China finally taking effect. And the dollar has also regained some strength as well, which has been putting on some negative pressure on the precious metals. But despite the tariff agreement, which is only for 90 days, it is a temporary bit of relief, but there isn't any long-term place or any long-term deal in place yet. So the question to ask is, what happens when the pause ends without any resolution in place? Interestingly enough, roughly 2 weeks ago, there was a potential upside for the metals due to the conflict between India and Pakistan. Now, I thought initially that this would put the metals a bit higher, since it seemed like there was going to be no way of reducing or de-escalating the situation, as the two nations were trading blows overnight in response to India's move. But now it seems like things have slowed down a bit, and while there is a ceasefire that was agreed upon, thankfully, nothing new has happened and stability is back for the time being. But like I said, I originally expected this to push the metals up. But until something worse comes out of the situation, I don't think that the metals are going to move due to this particular case. Now, the big thing that I want to talk about mainly, which a lot of other channels have covered as well, is the Basil III regulation that is set to begin on July 1st of this year. Essentially, what it does is it requires banks to hold a stronger balance sheet with higher quality assets. And since mainly everything is designed around paper contracts, they're forcing them to have real physical assets to back those claims instead of just paper ones, and that's a game changer. One thing that comes to my mind when I heard about this is, will this get delayed? I mean, I can't imagine that forcing a strict regulation on an already fragile banking system wouldn't develop into something more serious later on down the line. I mean, if you were to think about it, with the current paper to gold ratio at 132.44 to 1, this means that for every 1 ounce of gold, there are 132.44 paper claims, air quote, that really don't exist and need to be paid forward. Banks would need to unwind or offload any unallocated gold contracts that are not backed by physical gold. And this could involve settling the contracts in cash or transferring them to other parties that aren't subjected to the Basil III regulations, or they would simply convert them into that piece of gold that they're supposed to be backed by in the first place by acquiring actual physical gold. And the shift from paper to physical gold could lead to a liquidity squeeze as banks compete for limited physical gold supplies. And as you would expect, this would push the gold prices higher, and silver could follow or perhaps not be affected due to the regulations. But if the paper contracts become vulnerable, I would expect that the silver paper contracts would be next in line, and that could push the prices way higher. Remember, gold is in a bull market right now, and there's a graph going around that I'll show you as well, and I want to illustrate the foundation of where we currently stand. Because where we are today could just be the beginning, and with $3,000 gold might look like a bargain in the coming years. If we look at this graph, the past two bull markets had an average of around 150 all-time highs, and currently today we are at around 76, which you could argue we are right in the middle of the current bull market, and that would be a fair assumption. And there was also another video that I had made a while back, and I'll throw that picture slash graph real quickly on the screen here for you, showing the $1,000 increments of gold and the time frame it took to get there. In that video, I mentioned how gold could hit $4,000 in about a year and a half time. It takes roughly a fourth of the time of the previous one to reach the next $1,000 level. So with gold currently being in a bull market and possibly halfway through it, it could, and many analysts believe it does have room to grow. JP Morgan, Bank of America, Goldman Sachs, Deutsche Bank are just some examples of those who believe gold will be up by the end of this year and even into 2026. Now, of course, anything can happen, and I'm not saying or trying to predict that the price of gold in the next year, nor am I telling you to or making a case that you should go out and buy it. This is just data that I'm analyzing, and I'm making my best guess as to what could happen. Ultimately, I'll never know what's going to happen, and I don't think anyone will. And I say it all the time on this channel that if I wanted to guess the price of anything or try to time the markets, I'll just go spend a weekend in Vegas because you're just better off gambling at that point. But given what's coming up and what's been happening recently, I believe it's possible that gold could break out. And if you're forcing the banking system to reallocate paper assets into physical ones, that's just a time bomb that's been pressurized over the years, and that could really explode if they're forced to do this. But a question to ask would be, would the banks be bailed out next time, and how would that work? Are they going to be paid out via gold instead of the printed cash like we've done before? I don't think so. I think there's no way that they would ever pay them in gold to cover the balance sheet part of things. I mean, I'm sure there's going to be some accounting manipulation going on where they would just cover the value of the gold in a form of cash to trick the balance sheets even further than they already are. I mean, who knows? I'm not an accountant. I don't know how all this stuff works. But I would expect them to weasel out one way or another, and they might not have the physical gold to back it up, but they'll probably have the value in forms of dollars to equate that. That's just my guess. And as you could guess, I'm still stacking regardless. I still believe silver is the better option right now. Despite gold being in a bull market, if we are halfway through it, I guess you still have some time to get on that train before it leaves the station, if $3,000 is your price point. But for silver, I believe we haven't even started that next bull run on that. But again, don't try to time the markets. You are always going to lose that. Just be patient and consistent in your plan and work it. You'll come out on top that way. But with that being said, it's been a quiet week, but today was a good day for the metals. What do you guys think about the new banking regulation and that could be taking place? Do you think it's a good thing or a bad thing? Let me know what you think in the comments down below, and I will see you all in the next one. Bye-bye, guys.